Well, unpredictable weather patterns around the globe, particularly here in Australia, are affecting soft commodity markets. And here to look more closely at this, I'm joined by Jonathan Barratt, Managing Director of Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney.
So these torrential rains are really playing havoc with soft commodities. What particular areas are being hit the hardest?
Whitney, it appears at the moment it's all basically the east coast, mainly in the wheat area, wheat and barley, where we actually started the harvest. And it is a major concern because we were expecting really robust crops out of eastern Australia, and with the dampness and the rain, it's certainly hurting a lot of yields for a lot of farmers.
And of course, there is more rain on the way, which means these conditions won't let up for some time. How damaging will this be for the industry?
I think it's going to be significantly damaging because we were expecting, as I said, robust harvest. What we've actually seen is major downgrades in wheat conditions, somewhere close to around about $50 per tonne, which basically means that the farmers aren't going to get the income what they expected. And I guess with the torrential rain that we've actually seen, some of the crops are actually just walking off and they're not even harvesting any of the crops because it's no good. Some of the crops have actually what we call sprung, which basically means the wheat's germinated on the stalk. So it's quite negative at the moment when I look in certain parts of Australia. And
no doubt this will push prices higher. What levels do you see them reaching?
Look, at the moment we've not only got weather concerns in Australia, but we've got dryness in the US for the winter crop. And that's certainly going to affect production, and we probably feel that production this year will be down by about 5 to 7%. Now that should see prices, in my mind, start to move to the top side, and I would not be surprised to see prices move anywhere from 15 to 20% higher over the coming couple of months.
And we saw earlier in the year, Jonathan Barratt, that Russia put a ban on wheat exports due to weather impacts on the sector there. Would something like that happen here if it gets worse?
Australia is a major exporter of wheat, so I don't think it'll happen here because we obviously produce and consume. So when most of the wheat's going overseas, I don't think it will happen at all.
And if we look at another soft commodity area, that's sugar. Now it's slumped after five positive sessions. What's behind that?
Oh, that was an actually interesting move because sugar has, once again due to weather concerns, we've seen the price of sugar continue to trade higher. But India, I think in more of a surprise move, announced that it will resume its exports. So we've come from a condition where they're actually holding back to where they're now going to resume exports, which gives us an indication that this year's production hasn't been as bad as what we've expected. So if they come out and confirm that, then you could probably see that sugar prices could actually start to head down to support, which is around that 23.30 level.
Well, that brings me to my next point. Sugar has gained 22% in the past 5 months. So you see it coming off these highs?
Yeah, I do. On the back of that news, I think you'll see it. I mean, we had quite a large fall last night, and I think we're starting to get a bit of story around where commodities are actually heading due to what's happening in Europe. But when you focus back on sugar, it's had a run purely on the back of the concerns that India, which is the second largest producer, will not produce or will not export. As a result of that, with them turning around, you could probably see prices head to the lower end again.
There's also some issues surrounding the corn sort of harvesting, and that's that area of the commodities sector, soft commodities sector. Can you just give us a little update on that?
Yeah, well, with corn, I mean, I guess corn and soya to me fall in the same group. We have concerns once again on what's happening in terms of the weather side of the effect. But more importantly, we look to China as to whether or not China will resume its demand for corn and soya. And that's exactly what we're seeing at the moment. There was an area where we thought that China was holding back, but just only in the last 48 hours they've come back into the market. And I think that's a positive sign for both of those commodities.
What's been weighing on China's demand for soya and corn?
Well, in particular for soya, China doesn't really produce. And it is a major part of their diet. And what we've found is that over the last month, 2 months, there's been that story that China's slowdown, economic slowdown, is going to cause a concern on their imports of soya and corn. But what we've found is that China has resumed its traditional buying, and that's a good thing for both those commodities.
What about the fears of inflation on food prices as well? Does that play some sort of part?
Look, it is a worry. I think if China didn't import the food or corn and soy, then that would be more of a concern, because food inflation would continue to rally in China. Now remember, we had food inflation upwards of over 20 to 22% over 18 months ago. So I think that'll weigh on concerns for China, and for China to continue to import these foodstuffs.
Jonathan Barratt, just briefly before we go, let's move away from soft commodities and on to crude. Now, it seems to have gained some ground.
Crude in itself it's interesting, because we're getting good economic data out of the States, and as the number one consumer, we're seeing crude gravitate to the top side. But on the bad side of it, I guess, is the concerns escalating in Europe, and also the potential slowdown in China. Crude, Whitney, is in a range, there's no doubt about it, and at the moment I actually feel that it can't move too much to the top side. I think around that 85, 86 is pretty much resistance on the top, and I actually see it coming back to the lower end, back to US $80 a barrel.
And just before we go, I don't want to hold you too much longer, but OPEC, what do you think their next move will be?
I think it'll be steady as she goes. I don't think we'll see much movement out of OPEC at all. I feel that they want a stable global price just as much as everyone else. But if it does get down to 70, 75, you'll probably see that they'll probably put their hand up and sort of change their quotas just a little bit.
All right, Jonathan Barratt, we'll have to leave it there. Thanks for joining the program.
Thanks, Whitney.